Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, September 19th, and it is the day after the FOMC interest rate cut, where we had a 50 basis point rate cut, and that is the kind of rate cut that you see when the economy is in a crisis. And the market opened up with a huge gap up. So SPY opened with a gap up above the previous highs that we made yesterday, and then from there squeezed higher. And if you've been following along for the past few months, whenever the market gaps up or down completely over the implied move, we tend to squeeze in that direction. And in the past 3 months, whenever that has happened, it has happened without fail. So in September, when we kicked off the month with that gap down, we did gap completely underneath the implied move, and then we squeezed lower. And then before that, let me go see the next one. We had right here, consumer spending gap. This was a gap completely over the implied move, and then we squeezed higher. And then before that, we had the gap that we had after Amazon earnings, and that was completely underneath the implied move, and we squeezed lower. So today, between futures and pre-market, we managed to get the price completely outside of the implied move, and shorts were forced to cover, which caused us to squeeze higher. So we did make new all-time highs today at 572.88, and in SPX, same thing. We gapped up completely outside of the implied move, and then from there we did squeeze higher to make new all-time highs at 57.33.57. And I did actually take a pretty scary trade here today. I did right after open, so with somewhere here within the first two candles, I took 57.15 and 57.25 bear call spreads. And I'm not gonna lie, we did keep squeezing higher, and because I knew that whenever we gap over the implied move, we tend to push higher, I was a nervous wreck today for the entire day, but I did actually get my move, and we did close under 57.15, so I did have a 100% win today. But I was definitely sweating it today. And SPY did close up 1.71%. SPX closed up 1.7%. VIX got crushed today, down 10.32%, and we did not even touch the implied move today. And in QQQ, we saw the same thing. We gapped over completely outside of the implied move, and then from there we squeezed higher. We got above 474 that we've been struggling with for the last 5 trading sessions, and I'm going to zoom this out just a little bit more. This is 3 months right here, and we did have a, let me see if I can get this right. Okay, so we had a breakout today from the triangle that we were trading in. So we had lower highs and higher lows, lower highs right here, and today we broke out. So that was definitely a bullish move. Let's see if we can continue with that momentum and get some follow through there. So you could see that a little more clearly here. The wicks did get above that yesterday after FOMC, and today we just gapped over it. So huge day for QQQ, up 2.53%. VXN closed down 7.13%, and we did not even touch the implied move here. And IWM, this is the first time all year that I traded IWM, and I'm really happy that I did. I've been watching the way it has been trading, and we did open IWM today with a gap up all the way outside of the implied move. Then we did get pulled back down, and we bounced on this resistance right here. We actually turned it into a support, and that goes back to right here in late August. And we bounced back up and took it all the way back to the top of the implied move. Top of the implied move was at 224, and you could see that we did close within the implied move, 223.97, so 3 cents in, and I did at open sell 224 225 bear call spreads, and that closed just barely within that by 3 cents. So after everything was settled and closed, that did close up 95% for me. And we did have another day trading above that 35 EMA. You could see right here on the way down that 35 EMA was resistance, clearly defined bear trend, and then once we got back above it, right here, 35 EMA clearly defining the uptrend. So right now we are still in an uptrend in IWM. So keep an eye on that 35 EMA. IWM did close up 2.06%. RVX closed down 9.96%. Huge crush here. And we did close within the implied move here. And then last but not least, we have the Dow, DIA. We did open with a gap all the way to the top of the implied move, almost to the penny. So 422. And then from there, we dropped into that gap, closed about 1/3 of that out before bouncing back up. We got just a little bit outside of the implied move, both on the day and the week. And we did pull back to close within the implied move. So 422, we did close within that, and 422 was the implied move for the entire week. So let's see if we can close the week within this as well. And the Dow did make new all-time highs. So every day this week we actually made new all-time highs, and that was at 422.78. Not sure if I mentioned, but SPY and SPX also made new all-time highs today. But back to the Dow, we did stay above the 35 EMA. This is on the 30-minute time frame. So we are still in a bullish uptrend on this time frame, and we did close up 1.25%, and we did close within the implied move today. So really, really wild day. I honestly didn't expect it. I thought that we would pull back, but this is why it's good to have a plan no matter what happens. And tomorrow is the last day of the trading week. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, please leave me a comment. This is really difficult stuff, and if you need me to clarify something, or if you don't understand something I'm saying, just leave me a comment. I will get back to you. And if you learned something new here that led to a profitable trade, then don't forget about that thank you button. It is underneath the video, and it's an easy way to support my channel financially. And it does encourage me to keep making new content. And lastly, if you know anybody that could benefit from seeing my videos, then sharing a link to my channel is another easy way to support what I'm doing here. Alright, so starting in SPY, and real quick before I forget, we do have triple witching tomorrow, and that just means we have stock options, index options, and index futures all expiring on the same day, and a lot of times it can give some weird volume, higher than average volume, and slightly elevated volatility. Last time we had triple witching, if you didn't know, it was just like any other day. It was very anticlimactic. So if you see some weird price action, a lot of times you'll see a spike in price and then it'll come back down. So just know we do have triple witching. So SPY tomorrow, the implied move is between 566 and 576, and that is from options. The 30-day average volatility is $2 wider in each direction, 564 to 578. And the implied move on Monday's contract is 565 to 577. And this is not a very difficult trading range. We don't have too much going through it. To the upside, we do have the all-time highs that we just made today. That is at 572.88. And then if we do get above that, 576 is the top of the implied move. And then 577 is the top of the implied move on Monday's contract. And we have the strikes perfectly set up $1 apart here. So 576, 577, 578. So if we do have a big move up tomorrow and we find ourselves near the top of the trading range, then I would probably be looking at 577, 578 bear call spreads. And that's only if we make the move all the way into here. And then to the downside, we have the 35 EMA. This 35 EMA has been a strong support for us ever since we did see CPI and then PPI last week. So right here was CPI and we dropped and then came back up. Then we had PPI and then we had that big push. We consolidated back and we bounced today. So definitely that level needs to be on your chart. If we break the 35 EMA tomorrow, the bottom of the implied move is at 566, and then the bottom of the implied move on Monday's contract is 565. Here we also have the strikes $1 apart. And if we do drop, if we get into this bull gap right here, then I would probably be looking at 565, 564 bull put spreads. And of course, you always want to play that by ear. You want to watch VIX to see signs of volatility, expansion, but having a few strikes on each side to look for is always a good idea. And then we also have the bottom of this up gap. That was the up gap that we made today. It was a huge up gap. It took the entire implied move and a little bit more. And the bottom of that gap is where we closed yesterday, and that is at 561. And by yesterday, I mean Wednesday. And that is SPY, taking it over to SPX. The implied move over here is between 56.70 and 57.55, and that is from options. The 30-day average volatility is $15 wider in each direction, 56.45 to 57.80, and I'm wrong, that is $25 in each direction on both sides. And then on Monday's contract, 56.55 to 57.70. And to the upside, we have those all-time highs, 57.33, 57. We did make those today. And if we do get above that, maybe see that level as a support, then 57.55 is the top of the implied move. And on Monday's contract, 57.70. And up here, 57.70, 57.80 looks like a great spread if we do get above the implied move or near it. And then to the downside, we do have the 35 EMA right here going right through the bottom of the implied move diagonally. We also have the top of that gap today, right around that 35 EMA. 56.70 is the bottom of the implied move for tomorrow. 56.55 is the bottom of the implied move on Monday's contract. And then the bottom of this gap right here is just under 56.20. And remember, when you fill a bull gap, a lot of times we'll see a bounce at the bottom once it's filled. So really not a difficult trading range for tomorrow. We might have an easy Friday to close the week. I hope I didn't just jinx us. But then taking it over to QQQ. The implied move over here is between 478 and 489, and that is from options. And then the 30-day average volatility is a little bit wider, 475 to 491. And the implied move on Monday's contract, 476 to 490. And to the upside, we do have this level right here where we got rejected. And if I zoom out a little bit, you can see that that has been a steady resistance for a little while now. Let's see what the date is here. This is in July, this is August, and then here in September. So we have seen this resistance before, and it is just above where we closed today. So that is right at 485.50. And then if we get above that, 489 is the top of the implied move. 490 is the top of the implied move on Monday's contract. This right here looks like an awesome spread to the upside if we do get near the top of the implied move. And then above all of that, we do have the down gap, and this is the down gap that we saw just off of all-time highs. So top of that gap is at 495, and just like when we fill the bottom of a bull gap, that tends to be a support. But the same thing happens when we fill a bear gap. So the top of that bear gap, 495, look to that level as a resistance. And then let me zoom back in really quickly and see if I see anything else. This dashed line right here, I believe is a previous resistance. Yes, it is. So if we do drop down to that level, it's just under 478. That is a place that we could bounce on the day. That could give a little bit more strength to that 478 strike if we do come near it. And of course, if we do drop down here, I would be looking around 476, 475 bull put spreads. And that just means you'd be calling bottom at 476, and you would want the price to close above that. I have been getting a few questions about bear call spreads and bull put spreads. In the next few weeks, I probably will put a video together, so keep an eye out for that in the near future. And then just underneath all of that, we do have QQQ's favorite number, 474, and we have been chopping around that. We did finally break out, get above 474 with some conviction, but for some reason I feel like we're just gonna see it again. So 474 underneath all of it. So that was QQQ, then IWM. The implied move over here is between 221, and it looks like I forgot to fill out the top. So 221 to 227, and that is from options. The 30-day average volatility is $2 wider to the downside, 219, and this says 228. So did I read this one wrong? Nope, 227 and 228. So $1 to the upside, $2 underneath. So that is on tomorrow's contract, and then Monday's contract, 219 to 228. And then to the upside, the first level to look for is going to be right here. We've got this dashed line right here, and let's zoom out and see where that takes us. We did see resistance there today, and that is right here. We did see a wall of resistance around 225, and that was mid-July to early August. So 225, and we did hit that level as resistance before we finally made that push up to close out this long time bear gap. As soon as we closed it out though, we got smacked back down. So 225, we're just underneath that. And then above that, if we do get above 225, then the top of the implied move is at 227 and 228 on Monday's contract. Underneath us, we have the 35 EMA. That is coming down from the bottom and cutting right through the middle of the bottom of the implied move. And then underneath that, we have this bull gap. This was from today, where we gapped up and we didn't even come back down and fill any of it. 221 is the bottom of the implied move for tomorrow. 219, bottom of the implied move on Monday's contract. Bottom of that gap is at 219 as well. So triple 219 support right here. So here's another really easy trading range for tomorrow. And just to zoom out just a little bit, we do have 3 moving averages right there. And it just seems like they're screaming, "Come to me." You might get pulled down to that next week. We had a very solid run. Wouldn't be surprised if we pull back. This just seems like it would be a great target. Definitely not looking at that for tomorrow though. And then we do also have this up gap. This is Monday going into Tuesday of this week. So this week we did have 2 pretty solid bull gaps before and after FOMC. All right, and then lastly, DIA. The implied move for tomorrow is between 418 and 425. That is from options. The implied move on the week that we took over the weekend is between 407 and 422. We are just under 422. Makes me think that a pullback is likely. However, that's not what happened last week. We don't have to close within the implied move for the week, but it is just a high probability chance that we do. So 425, top of the implied move for tomorrow. 422, top of the implied move on the week. 35 EMA is just below us, and we have traded completely above that level all week. We started the week consolidating towards it, heading into FOMC, and then after FOMC, that gap up. So as of right now, 35 EMA, underneath us is support. Then 418, bottom of the implied move for tomorrow. And then underneath that, we do have this up gap right here. We gapped up to start the week, and for the rest of the week, every time we came near that gap, it was a buy level and it propped us up higher. So the top of that gap is at just under 416. Bottom of that gap is just under 415. So we got about a dollar wide gap right here, and it has been acting as support all week. So there you have it, guys. Everything you need to know to make tomorrow awesome. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys on Sunday night.